Hi, hello, very good morning. This is your Dhanush. I will come to this knowledge session. So, as usual, before going to start for the topic, let's have a small quote for the day. So, don't let someone opinion of you become reality. Okay. So, this today's topic is very clear. So, the current market scenario. So, where we stand. So, what's the market outlook for this next few months or few quarters? So we have few things must and should consider. So out of three, there are three is most important. So one is in corporate earnings. So after this cutting this corporate tax in 2019 September, so corporate profit to GDP has grown drastically upside. So where if you see corporate profit to GDP before 2019 is to almost 2%. So the same has been now it's been 4%. It stood at 4% corporate profit to GDP. So the same thing will continue to expecting to go by another 8%. Okay, so that will we are in a very big profit cycle, so revenue cycle. So that we must and should consider in as far as India is concerned. Okay, so the second thing, if you see this inflow in FDI. So if you see this from October onwards till this June, July, they have sold almost $33 billion. It's approximately 4 lakh crores they have sold. When it comes to this, after this, from July mid and then August, September, they started buying on this. So they bought from last 3 months till this as an yesterday. So approximately $4.5 billion they bought. So still FI is sitting in a cash. I think definitely they had missed this Indian opportunity before only. So now still they have sitting with almost 20 billion with cash. So definitely they're going to pump in this market. Because of why they're not pumping in US, still they have been facing some recession in US. So there's a huge opportunity in India. So definitely they're going to pump money in India only, whatever they liquidated. Okay. So when it comes to this domestic inflow, so just to seeing these numbers, we got mesmerized in this. Like more than this SIPs, amount is going for this ETF. This number is last month this ETF number was almost 15,000 crores. Can you imagine this? This and then this SIP amount is in equity SIP amount is approximately so near to this 12,000 to 13,000 crore in mint. See, every month they have been buying on this. There is no alternative option for market to sit with a cash 12,000 rupees or 30,000 rupees cash. They has to deploy. Okay, so these are the major three concerns we have to consider as for this current market scenario. Okay, so when it comes to this inflation, is now in India almost we have stood on 7% of inflation. When it comes to this US, they've been almost 8.3% now. So as far as this India is concerned, we are doing much better than the other all Asian markets in inflation is concerned, because of your outperforming in index also. As far as that is reflectingly in Nifty and Sensex. Let's say example this US market, I mean S&P 500 has fallen 18% YOY from this calendar year. So wherein hardly were same 2% gain were Nifty. So what it indicates is outperforming all the Asian market. So that's we have to look at it very keenly in this. As far as RBI is concerned, so they keenly monitoring this inflation. Okay, so as far as let's say example this where Federal Bank is increasing the 75 bps interest rate, where you are going to increasing hardly 25 bps. So market is not accepting what does this Federal Bank is doing. Does not matter. So what this India is taking steps is not necessary what this Federal Bank is. We have to follow that because of your India's inflation is controlled. Hence this the decision is making by this whatever this RBI. So that's extremely good now because of this inflation is under control. Okay, so this is the things when it comes to this domestic consumption. I think now you observe a lot of times there's 52 weeks low is trading IT index. When it comes to this, when Nifty is trading near to the 52-week high, there is no correlation now. So why? Because of there is a main reason. IT stocks, IT index is completely depend upon the global market. I mean, it is US based revenue. When this US itself is in a recession, how can we expect this revenue will be in a perform? So definitely it is also under pressure because of the US recession. So IT stocks under pressure. As far as this IT revenue, I mean IT companies ka revenue profit margin is concerned, it's been trading this below this pre-COVID level. Hence this it's getting impact. So it's not going to be permanent. It's going to be now the 1 to 2 quarters we have to bear that. If you bear, definitely there is a huge scope of this now on this IT sectors. As far as my concern, if any stocks is giving this good opportunity for buying, I'm sure this buy for some large cap like TCS, Infi, HCL, Tech Mahindra and all. So just accumulate the stock. Just bear this next another 1 to 2 quarters. It will definitely reward you. As far as this is IT concern, IT sector is concerned. When it comes to this, other sectors is outperforming. No, it's no glamorous like banking. No, it's no extremely bullish on this banking. And then when it comes to this FMCG, then it comes to the automobile sectors. So all are, and then health sector. So these are the domestic consumption. So as far as I'll be mentioning lot of time in the early message. So focus on domestic consumption. Domestic consumption. So these are the stocks as outperformed from last 2 to 2.5 months. Okay. So further, I'm sure this IT companies, banking sectors keep an eye on this. Still, there is a huge scope for this banking sectors. HDFC Twins not just participated. There is a huge scope for HDFC Twins. Bajaj Finance, again Bajaj Finserv, Bajaj Finance, and then SBI, Axis, ICICI. There is a huge scope. Any tips? I think as per my knowledge, so we can go for buy. So these kind of stocks. So this is a broad market. So this positive is concern. So it maybe there is maybe 1 to 2 concern for this negative factor also we have to consider. So the negative factors, the Ukraine war continues, so that impact this increasing this gas prices, so that we have to keep in mind. So if that what to say, Urea plants are all getting close in this Ukraine, so that leading to this increasing the fertilizer prices. So if that increasing, so but as far as India is concerned, they're taking steps to the doubling this subsidy of fertilizers. So if that we have to keep in mind. So if that is again continues, then it will be worrying this for this market. So wherein it will so not happen like in US market is trading 52-week low, then Indian market is going 52-week high. So we have to get a discount. If any discount like 4%, 5% or 6% in the equity market in Indian market, so I believe there's a good opportunity for us again for new players to enter the market. Our existing players who have been carrying these positions, okay, I'm sure that we can enter in this. Just keep it some surplus cash also to, if any dip, can be bought. Okay. So again, if it's in US market under recession, so your market also we have to keep in mind so because of this 20% of GDP is contributing from this global market, I mean abroad. So for that reason we have to keep in mind on this. So only one thing I would like to say in the market, for every time in market, correction is temporary, but upside is growth is permanent in the market. That's only the one scenarios, this only the one strategy I know. I will follow that, where any dips can be bought for fundamentally good stocks. Okay, so this is how this anything related that I'll update you further. So thank you for watching my video. Thank you. I'm signing off, Mr. Dhansh. Thank you. Bye.